The debt deal kicks off another series of struggles. For more on what we may see in the markets, we welcome Peter Fisher. He's head of global fixed income at BlackRock. BlackRock oversees almost $3.7 trillion, worth stating that's more money than the Fed. Peter was formerly Treasury Undersecretary for Domestic Finance. He spent 15 years at the Fed. He is with us right now in the newsroom. Peter, thanks so much for coming in.
My pleasure.
In all your experience, have you ever seen anything like this?
No, it's really a little different. I mean, I think the politicians really went a little too far with the threat of a default. That's something we know should be off the table. I don't think prior presidents let it pass their lips. So this
sounds like you see equal fault on both sides.
Oh, yes. I think that both parties just went a little too far. Now, we're really encouraged by how much progress they made over the weekend. Looks like they've taken default off the table. They knew they were going to have to do that. And this framework looks like a positive development if we can get it enacted. So that's positive. We can see the markets, the risk asset markets rallying a little bit this morning on that news, but still there's a lot to get done.
There is a lot to get done. You and I spoke over the weekend, even before we knew that Senator Reid had in fact signed off on a plan, and we were talking about all these ideas of robbing Peter to pay Paul and the U.S. living paycheck to paycheck. So as you just alluded to, we seem to have avoided that for now. But what comes next? What's next for the markets?
Well, we're all very curious about the composition and timing of the spending cuts that are part of the framework.
There's a lot of unknowns.
That will have a big influence on the path of the economy, a direct impact of the rate of federal spending. So that's a big uncertainty. The other one is, will this put off the risk of a downgrade by one or more of the rating agencies?
What do you think, Peter?
Well, it's right on the cusp. I mean, I think it's going to be up to them. The signals they've sent is that they'd have to see something more like $3 or $4 trillion.
Yeah, they've been pretty clear.
This is a little bit under that threshold, so I think that uncertainty stays with us.
Peter, you're head of global fixed income at BlackRock. That's a huge responsibility. How are you advising your team to deal with these unknowns? What's the best strategy?
Well, for some time, going back a month, we've been trying to stay up in quality and up in liquidity in all the client portfolios we manage. And you can see that's how risk assets have responded around the world. They've been coming off. So investors have, in a sense, already prepared for the risk of a default or even the risk of a downgrade. So we've been focused on that.
So you don't think the market is going to be, if it does happen, you're saying the market's not going to be that surprised?
Well, we've clearly been forewarned. Now, the fact of a downgrade, if it were to happen, isn't going to change the economic fundamentals. The rating agencies will be looking at the facts that we all look at. So it's not an
GDP.
Well, yes, a scary GDP number is something, or whether there'll be the revenues flowing in, that I think the rating agencies will take that into consideration.
Peter, we thank you so much for the time. Peter Fisher joining us. He is head of fixed income, global fixed income at BlackRock.